Welcome back to DC Wealth Builders, where we break down the strategies, systems, and moves that help build your wealth. Today, I'm going to break down 5 of the biggest reasons new investors struggle in the DC real estate market, and more importantly, how you can avoid them so that you can start building your wealth today. DC is one of the most powerful real estate markets in the country, with a strong and stable job base, limited land, and a track record for long-term, powerful appreciation. It's also one of the most misunderstood markets, especially for first-time homebuyers. So we're going to crack the code and pull back the curtain on what will allow you to build wealth in this market. Challenge number 1, overestimating cash flow in a high-cost neighborhood. This is the first mistake, and I often see it because ultimately you're overestimating cash flow. New investors assume that if a property is in a solid neighborhood, that the numbers automatically will work. But a rental in Columbia Heights or Capitol Hill does not necessarily perform the same way that one might in Montgomery County or Prince George's County. DC is often what we call an appreciation-first market, not a cash flow market. So what does that mean, right? Your balance sheet, your net worth is gonna move before the cash in your bank account does. The value of that property may go up before the cash that you're receiving from a rental property actually increases in your pocket. And if you don't understand that distinction, then you might make an emotional decision instead of an analytical decision. When you feel like, hey, the cash is tight, right? You want to make sure you're investing on realistic math, the rental numbers. Understand your rental, but your expenses, and the reality that if you're investing in a 100-plus-year-old property, then you're going to have other challenges that you need to make sure you have the cash on hand to adjust to. Problem number 2. Not understanding DC's regulatory environment. And this is one where seasoned investors still get tripped up. This is not understanding what those local rules are. DC is not a beginner-friendly investor market, particularly when it comes to regulations. You're dealing with things like TOPA, the Tenant Opportunity to Purchase Act, which was recently adjusted but still has a significant impact when you're thinking about that investment. Rent control, high regulatory and often lengthy permitting processes. Not lengthy like 60 days or 6 months, it could even be a year plus. Historic district overlays that can drive up cost with requirements around renovation, materials, design. I've seen investors, buy a great deal and then get stuck for months, sometimes years, because they didn't understand the regulatory environment that they were walking into. Ignorance around this process is not just expensive, it's paralyzing and can literally explode your deal. Challenge number 3, understanding the overall rehab cost in an older housing stock environment. This is the challenge, where you come in and think, oh, that's something simple, it's just cosmetic. This will be an easy $20,000, $30,000 repair. DC's homes are beautiful, they're old, they're historic, but behind the exposed brick and charming facades, you're often going to find new knob and tube wiring, outdated plumbing and pipes, which it can be your responsibility going beyond the walls of the house into the streets and sidewalks to improve. Structural issue, water tables that impact basement renovations, lead, asbestos concerns. Your budget, like you are renovating to a 2005 row home, when really you're budgeting to a 1900s row home, it will completely blow your budget. So that's the challenge, right? It's not a contingency optional place when you're thinking about your contingency budget. You should probably double it. Challenge number 4, chasing a hot zip code instead of the fundamentals. This is where you're looking at, hey, this looks good. I know this neighborhood. It sounds good. It's a headline, right? Everybody wants to buy in the headline neighborhoods, the neighborhoods that we all know and hear about often, but that doesn't equal profit. Smart investors are looking at what are the rent to price ratios. So what's that price and what's the rental? What's the overall demand in that area? How many people are looking to rent in that area? What's the exit strategy? How are properties buy, hold, and ultimately sell? What's the long-term zoning potential? Could you do something different beyond a traditional residential use? And then ultimately, the economic development in the area. What's actually happening in the broader area that could impact that long-term value? Challenge number 5, and this one, I think now in the YouTube culture, we think that we can do DIY everything. And this is a huge mistake, especially when you're trying to do everything on your own. DC and investing is a team sport. You need to make sure you've got a strong team, an investor-savvy lender that understands the financing and timelines, a local agent, we've got lots of those, who understand investments and the math that you're looking to achieve based on your buy box, contractors who know and understand and can navigate the DC permitting property, a property manager, likely a good attorney who also understands tenant laws. When you're trying to do it all yourself in this market, it doesn't make you scrappy, it makes you slow, and it's gonna drive up your cost. So how do you avoid that, right? We just talked about a lot of the challenges. Let's talk about some of the solutions. How do you actually avoid those things and make sure that you're actually on the other side? So first is start where the numbers make sense for you. Instead of forcing deals in premium neighborhoods, look beyond the headlines into neighborhoods where the maths for you. Acquisition costs are lower, obviously make the math work better. Number 2, learn the zoning before you buy, before you even make an offer. Understand what's allowed, what's not allowed, where are ADUs or conversions possible. This zoning knowledge is ultimately a wealth multiplier in DC. It's really gonna let you maximize the potential in a specific area or neighborhood when you're making that investment. Solution number 3, build your local team early, and I emphasize local. Find other professionals who invest here, not just people who have a license, but have a track record of investing and working with investors in the area. A local investor-friendly team will save you far more than any cost to work with those people. Solution number 4, use DC's data tools. Think about tools like DC Atlas Pro that allow you to research permits, ownership, history, and zoning. Data removes emotion, and emotion kills your deals. People build wealth in DC every single day, but they do it with a local team, understanding the numbers, and really letting the numbers drive the decision versus the emotion. Here's the truth. People build wealth in DC every single day. And the difference between those who win and those who struggle isn't luck. It's education, strategy, and collaboration. So if you're serious about building wealth through real estate in the DMV, do not go it alone. I've got an amazing team of agents. They would love to be part of your journey. And if this resonates with you, hit the subscribe button. Join us on this incredible wealth building journey. And I look forward to seeing you next time on DC Wealth Builders.